Good morning and welcome to the VSA Morning Miner. It is the 1st of November and a wet morning in London. Quite dark now in the evenings. The clock's changed. Paul, how are you doing though?
I'm well, thank you, and had a good turnout of Halloween trick-or-treaters at the house here.
Very good. Right, not too much scary news this morning. In fact, it's all pretty good. Let's start with Cornish Metals. They've added to their acreage in Cornwall.
Yes, they have. They made an announcement today that they picked up another 49 hectares of a property which immediately adjoins on the southeast to their existing South Crofty mine position. And specifically, it's targeted a feature that produced back for about 150 years in the 1800s and first half 1900s, called the Great Flat Lode. And they've picked up a good chunk of ground on that. The existing property position already had the southwest end of that feature, but this adds into the central portion of the feature as well. It was a tin and copper reef that dipped at only 30 degrees or so, so that's why it was called a flat reef. And one of the things they wanted to pick up this ground for is there was 3 drill holes put in about 50 years ago, which indicated there's another tin lode underneath the Great Flat Lode that apparently was only discovered but never otherwise put into development. So that's why they picked it up, I think, at this point.
Yeah, and looks like it plugs a nice little gap that no doubt have been niggling management that they hadn't yet been able to fill. We've got 5 years of exploration rights which can be extended, and then I think a 10-year mining lease which can be converted into at any time. There's not much on the numbers as to the royalty, although there is one with a sliding scale for the tin price, and there is an annual rent, but those numbers haven't been disclosed.
Yes, that's right. This Great Flat Lode, it had a known strike length during its production history, over 3 kilometers long. So it is a significant one of the significant ore features there within the Camborne mining area.
Yeah. Okay, Paul, what's next? Cloudbreak have had an announcement as well.
Yes, a strategic review by management from Cloudbreak Discovery. They've come to the conclusion that they want to de-emphasize or otherwise split the higher risk grassroots exploration side of the business from the what they want to focus on more so, which is the acquisition of royalties and interests in more advanced or producing stage assets. So they are going to essentially divide those budget features within Cloudbreak. Now, whether they've created a separate exploration named entity as a result, but how much separated it is has yet to be determined. A peer business model to this model is the Altus, Elemental Altus, which is currently listed on the TSX, and where Altus used to be listed here in London, where they do both exploration and have a royalties business as well. So we'll see how that plays out.
Okay. And then probably something we'll start to see more of, but an announcement from Karora Resources about carbon neutrality.
Yes, that's right. They appear to be the first producing company, mining company, that I'm aware of anyway. This Karora ASX listed produces both gold and nickel in Australia. They have made an announcement. They have claimed to have achieved carbon neutrality for this year, both in the Scope 1 and Scope 2 emissions categories, where they have otherwise either reduced their emissions or otherwise purchased carbon credit, qualified, verified carbon credit offsets in order to offset their existing operating emissions. So we'll be looking forward here to their ESG report as it comes out in Q1 2023 as to how they've accomplished that. But it's a role model essentially to demonstrate that yes, mining companies can get relatively early in the right circumstances into carbon neutrality. So very encouraging there.
Yeah, I think projects that will be able to do it first are obviously those that are well supported with renewables or hydroelectric power, but we'll see how long shareholders are prepared to tolerate carbon offset credit purchases if their margins are being squeezed from lower commodity prices and, well, in Europe, higher power prices, that sort of thing. We'll see how important the E in ESG is as margins get squeezed on that front.
Right, and how sticky the institutional investors will be when we get into those more challenging commodity price and cost situations as well.
Yeah. Anything else, Paul?
Yes, just to mention that there were quite a good number of London and wider UK investors, but the other shoe has dropped, as it were, and Pure Gold has passed into administration.
Yeah, I did notice that there was a small announcement out from Zimvold about, I think, a contractor announcement, but the London lithium stocks are having a bit of a breakout at the moment. Brad Ahead, well, Cleantech led the way, but Brad Ahead, Zimvold, and Atlantic have all had a bit of a bounce recently, having hit lows at the end of October. And obviously, Alchemy Capital Tees Valley is having a storming run, up about 80% in the past few weeks. I think that's led by a bit of a bounce in Ganfeng, but London lithium stocks looking like they're on a run at the moment.
Well, that's a very encouraging sign, and more. We definitely need more encouraging stories in the junior space as far as share price performance here.
Okay, Paul, we'll call it a day there, and we'll be back tomorrow.
Very good. See you then.
Thanks very much.
Mm-hmm.